So the RSI is the relative strength indicator, and it pretty much tells you when a stock is overbought or oversold. So it has two ranges or extreme ranges. We have 30 for oversold and then 70 for overbought. So essentially, the theory is that when it goes over, crosses over 70 and then comes back down over 70, that's indication for you to sell. And then when it goes, crosses under 30 and then goes back over 30, it's indication for you to buy. So I like to use the RSI not to tell me when I should get into a position, but whether or not, or shall I say, I don't use it to determine when or not I should automatically enter a trade. I use it to tell me how much time a stock or how much run a stock has in it before I know it's gonna have a little turn to the downside. Like for instance, like a lot of people, a lot of new traders, they just want to jump into a stock that they see is on a clear uptrend and they'll just jump in, without really knowing what they're doing. The RSI can help you prevent from doing something hasty like that. For instance, like if I see something's on an uptrend, a clear uptrend, and I want to get in, but I see that it's nearing over overbought territory, meaning that it's getting closer to 70, I'm not going to get into it because I know that if I do, it won't have a lot of momentum in it towards the end. And then I also know that it's going to come back down. So, for instance, like right over here, like if I wanted to get into a trade, yes, it just surpassed that third VWAP line, but that doesn't mean that it's going to stay above that VWAP line. So if I got in over here, I'm like, oh yes, I see that it is on an uptrend, and I want to get in. I see that, and I'm not looking at the RSI. I'm just looking at the graph. I might think, oh, okay, it's green. I'm gonna go in, but then you go up, and then what happens? It comes right back down. And that's where the RSI is useful. You can look at this to determine whether or not you should enter something, because if you don't, you might just end up losing money, and that's what happens with a lot of new traders. The same thing with oversold. So oversold is when it's at the bottom, has been on a downtrend for a while, and you know that it's going to do a trend reversal to the upside. So again, let's find another example. It's kind of hard with SPY. SPY never really tanks, so I'll look at Snap. Let's look at Snap. Okay, maybe not Snap. Let me think. Which stock has been down? Apple has been down today because I've lost some money on it. Oh damn. Wow, it really was down today. Let's see. Zoom in. It's right over here. Apple was down over here. So usually this is what I like to call the beginning of the triangle. It bounces out the VWAP line and then it gets really staticky, and then you see a clear downtrend. So this, someone who, uses patterns like that, they may like think, okay, this is on a downtrend, it's going to stay on a downtrend. But if you see that it's oversold right over here, you know that it's going to bounce back up, which it did. It bounced right back up, right above that EMA line, and went up. So it can be very useful for anyone that's new to trading who just wants to jump in on a trend. You should look at the RSI first just to determine whether or not that stock has a lot of momentum in it. And if it doesn't, I just say wait until it gets to one of the extreme ends, because what goes up must come down, and conversely.